Hello, good afternoon, and welcome to HYCM's online trading workshop with myself, Giles Cochran, the Chief Currency Analyst here at HYCM. A very good afternoon to you all. Just as folks are coming in, please could someone just type a question in the question panel, or just type a comment so I know that you can hear me okay and the microphone is working. I always appreciate that, to know that I'm being heard and I'm coming through loud and clear. Just as folks are coming in, just going to go through the HYCM disclaimer, just making it clear. Well, important, I do this each time, and it's important because market dynamics are constantly changing. So one of the things that I tried to teach on this online trading workshop is how to make trading decisions for yourselves and how to recognize for yourselves when the market sentiment mood is changing. And so any entry, stops, exits, any kind of trade parameters that we mentioned during this online trading workshop are not trading advice. It's always simply to, as it were, look over my shoulder, see how I made decisions, how I made fundamental decisions, technical decisions. So you can see it's always helpful to learn by an example to see how to imitate and how to make your own trading decisions. So this is not a signal trading service. Hi guys, hi Van. Hi Sammy, good to have you, both of you, lovely. Noor, Lolu, Ali, good to have you on board. Just as other folks are coming in, I think we'll get going with the webinar. We're having the usual outline. The workshop guide is just on your handout box on the GoToWebinar control panel. It's a little grey triangle. Click under that and you should see a workshop guide saying January the 28th. If you click on that, you will then have a workshop guide that pops up. That looks like this. I've designed this handout to be straightforward and simple to use. So each time we look at a special event, this event we're looking at is the coronavirus latest, and we're going to look particularly learning from the 2003 SARS virus and how it impacted Asian and US equity markets. We're going to have a little look at that. There's some interesting information I want to share with you about the historical impact of the SARS virus. So we will get to that during the session. If you've just joined this webinar for the first time, this workshop guide you print out, you can put it beside your desk, and I've designed it to be simple. So it's only 1, 2, 3, 4, 5 titles. But these 5 titles is the process by which I trade every single day. I'm looking back, looking forward, looking at the charts, looking at my risk, and then I'm looking at the outcome of my trade. Okay, so that is the process that I go through. And if you use this process, it's a good skeleton and a good start for you to begin to develop your own trading perspective and trading plan as you combine fundamentals and technicals together. So that is the special topic we'll be looking at. We've covered that. We've also covered the handout for session. Don't forget to download that and print it out for yourself. And don't forget that you can send an email. If you have a topic you particularly want to have covered, just send me an email and we can look at it in advance. Don't forget, during this session, we will also be looking at any trade setups that you're potentially looking for. If you would like my, take on any trade setups you're taking, then please send me the suggestion during the question and answers on the session. So I think most of us are in now. So without further ado, we'll get started. And the first thing I want to look at is a key event that's coming up, and it's the Bank of England rate meeting. So we just see this. You just go to this week, you'll see that we had the Bank of England rate meeting on Thursday at 12 o'clock. That is going to be a very, very important rate meeting. So there's expected to be one more dovish member on the bank rate vote. So just remember that this official bank rate vote tells you how many people are hawkish, how many people are dovish, and how many people are on hold. So in the last rate meeting, we had no hawks, 2 doves, and 7 on hold. At this next rate meeting, we're expected to have no hawks, 3 doves, and 6 on hold. So any deviation from that will in itself move the pound. So be aware of that. Now, we're just going to discuss it a little bit here, going back to our PowerPoint. There is roughly a 50-50 chance for a rate cut. I think the markets are pricing in the futures markets around 60% chance for a rate cut, so slightly better than even odds. And you've noticed that the pound has been selling off mainly on position squaring. So if you look here, this is the commitment for traders report, the COT report. You can see that the pound long positions, there were 31,000 long pound positions last week. Okay, so think about it. If there's a 50-50 chance of a rate cut, there's 31,000 contracts long, then a number of those long contracts are going to be closing their positions, so they're flat into the rate meeting because there's risk there. It's like a 50-50 chance. So looking at the pound US dollar chart, we see that the pound has been under pressure. Okay, so this is the week. So since the start of the week, and the moves for those down moves are basically that position squaring. So in my book, there's nothing tradable here in the pound at the moment. There's nothing that's really, you know, tradable. We can see we're setting up to be in a tight triangle. So price is consolidating. We're on that 1.3 handle here. So price for Thursday is really getting into a key level, key zone. So not expecting much fireworks until Thursday. Now, here's a little tip for you, right? This is a good little tip. Now, imagine that this is Thursday, okay? So imagine it's Thursday, and imagine it's like about 10 to 12, and we know that the rate statement's coming out. Now, there's a chance there's going to be an interest rate cut, okay? Now, if there is an interest rate cut, I'd expect the pound to fall about 150 to 200 points, okay? Because it's not expected. So the pound US dollar pair. But obviously, if you wait for that interest rate cut, there'll be a big chunk of that move gone before you enter the trade, okay? So one particularly simple way of trading those interest rate decisions is to put a sell on stop order about 25 to 35 points below price. So in this instance, if you were selling on stop, you might think, okay, well look, I know that if the interest rates cut, then price is going to smash through this level and it's going to go through here. So you think, okay, 35 points away, that would be about 1.2979, something like that. And I'll leave a sell on stop order there. You put your stop just above recent prices plus about sort of 10-15 points. So around there, 1.3028. Okay, something like that. Allow for your risk. Make sure you don't risk too much. Don't over leverage. And then if the interest rate statement comes out, you'll be taken in at a good price. More than likely, you'll be taking in at a better price than if you just press sell as you entered. So you might have one position on sell and stop, and then another position that you entered automatically if the interest rate was cut. Just want to share that with you. Simple method. Now, don't do a buy on stop, because if you do a buy on stop, as the spread widens before the interest rate decision, you might be triggered into the trade. Whereas on a sell on stop order, you're only brought in to the trade if the price goes below your entry. Okay, so a widening spread isn't going to bring you in. What a widening spread would do is it would stop you out if you have too tight a stop loss. So that's what you have to be aware of. But sell and stop on the pound, simple tactic for Friday. So use that. So that's what we've got the pound selling off. The big picture for the pound, just briefly go over it, is the Bank of England's got to think, is the boost to the UK from Brexit definitely happening and the Conservative Party is going to have a new budget? Is there going to be enough momentum to really help the pound to recover and put its best foot forward as it tries to strike a deal with the EU before December 2020? Or has some of the recent poor retail sales data, some of the weak data that we've had, does that mean that, well, actually Britain is not ready to carry on with interest rates as they are so they need to cut interest rates. So that's why it's 50-50. It literally is 50-50. So be aware of that, pound. But I've shown you one way to take advantage of a rate cut, because there could easily be a rate cut. All right, so get potentially ready for that. Turn now to your handout. Looking back, looking forward, looking at the charts, looking at a risk, looking at the outcome of your trade. The first thing you want to do is look back. Always look back, okay? Because we want to see what the mood of the market is before we start looking at the charts at the moment. And the mood of the market is very clearly in a risk-off mood, okay? We're in a definite risk-off mood, and it's been impossible to miss the reason for this risk-off mood. It has been the grave concerns that the globe has had over the coronavirus and its rapid spread. There's a province in China called the Hubei province, and there's a city of Wuhan, which is on lockdown alongside other cities in the Chinese region, and about 5% of China's GDP comes from that Hubei province. So the concern is if this coronavirus spreads, if it gets more deadly, then companies, travel, construction, businesses are going to lose momentum, they're going to lose growth, and that in turn is going to bring the equity markets down. Hence, the equity markets are moving now. Remember, the market is always trying to think what's happening next. It's always trying to be one step ahead. So it's really the start of last week, we had those virus worries building, and it was Friday where they really took off, okay? And it was Friday where I really personally, I thought, yeah, hang on, this is something to really take notice particularly of. So looking at the equity market, remember the equity markets give us an indication of risk. Now the equity traders are very sensitive to risk. So if they think something's bad for a country, of course, they're going to withdraw money from shares. And we see that being played out mainly in the indexes as those money flows come out of equities. Now, looking at the stocks that I have here, you can see, look, Asia market, the Nikkei 225 was down 0.55%. And the day before, it was down 2 point something percent, okay? We have the Shanghai composite is closed at the moment, but we have some strong moves out of the Asian equity markets, and across the board we had a sea of red. Now, one thing to be aware of is Europe has picked up a little bit. Now, we had a down day in Europe, you know, down 1%, 2%, the indices were really down. We had a slight recovery today, okay? So just to be aware that the risk tone is a little bit more tempered. Now, yesterday, the risk tone was up to like 24% at one stage. Today, the volatility index is much lower, so there's a lot less volatility than there was yesterday. So it's kind of a subdued day. So we're in a risk-off mood because of the coronavirus fears, but it's been a bit subdued. And here's a good giveaway. You see the S&P 500 futures here? They're up 0.5%. So in other words, what the S&P 500 futures are indicating is that the S&P 500 could have a positive open and could tick up on the open. So just to be aware of that pressure in the S&P 500 for the open. Okay, we've got the cash open coming up at 2:30, so an hour and 15 minutes we get the cash open, and we'll see the equity prices. Now, this risk tone is vulnerable. If we get, you know, suddenly, and you know, there's 20 new cases in Japan, or you know, there's person-to-person contact spreading, or there's 100 cases in the US, obviously the equity markets are going to start falling again, because the market's trying to work out how serious is this coronavirus. You know, what extent should we be worried about that? So we're still in quite a fear mood. And I explained yesterday to the guys who were on the webinar, I explained the Nikkei short position that I took, and I still update you on that, and I will update you on that and my thinking behind that. So in a risk-off mood, what do we expect? we expect to see Japanese yen, Swiss franc, gold strength, and US dollar strength. Okay, so all through yesterday's markets, that's what we saw. We saw the yen was strong, the Swiss franc was strong, we saw the gold spike up higher, and we saw strength on pullbacks, and we saw the dollar index break out of daily highs. So we had a textbook risk-off market. Similarly, we have the Australian dollar, New Zealand dollar, and Canadian dollar depreciate. Now, the Canadian dollar depreciates generally because oil tends to depreciate. When the market is risk-off, oil markets are falling because less people are traveling by air, less people are going to use transportation, less people are going to be investing in machinery for transportation. Less transportation means less oil consumption, hence the fall in oil prices. Okay. A little tip that I use, find it very helpful, is whenever I'm trying to gauge risk, first thing in the morning, look at the Nikkei. If the yen has been strong, that hurts the Nikkei. So a good barometer for a risk-off market is the Nikkei down. Again, when an equity market is down 1% or more, take notice. That's when you want to pay attention, because the equity market is trying to tell you something positive or negative. But that +1 kind of benchmark is a good rule of thumb for risk. Now, this was just the Nikkei. This was going back to the 21st of January. This is when I started to see this the danger of the Nikkei, and you can see the danger of the coronavirus. You can see here, equity market starting to fall. Now, this was a setup that I put up on the HYCM's trading Telegram channel. So just be aware that every day on a Telegram channel, I post a weak and a strong currency. So if you're not using the Telegram channel, make sure you are, because it's really useful. Here's the Telegram channel. Okay. That's it there. See Forex trading, smarter investing, and you can just see, like today, that's what I'm putting out for today. And I just giving, so I did yesterday, day before, just keeping a constant flow of strong and the weak currencies. So just to be aware of that, I just wanted to flag that up in case you're not aware of that service. It's there. Now, I said I'd fill you in on those Nikkei shorts. So I shorted the Nikkei on the Thursday of last week, and there was a nice technical setup for me. You can see that the market was in a risk-off mood. In my view at the time was that coronavirus was only going to spread. And so on the daily charts, you can see he got key support here, 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 here. So I took profit as price moved into this area here. I was trying to see if the lows would break on the day. Towards the end of yesterday, the lows weren't breaking, and I closed my position out for a profit. So just to be clear, that I said I'd update folks on that. So that was my trade there. Now I'm waiting, because my concern about the coronavirus is this, and it seems a funny thing to have a concern, but yes, the coronavirus is contagious, but at the moment, as it stands, it's not as deadly as SARS. Now, both coronavirus and SARS are deadly to some people, and it is a tragedy. However, in terms of the market reaction solely, what we're seeing from the market is we're seeing some risk-off tones just paring back a little bit now. So I'm just going to take a quick screenshot of the equity markets and the bond yields, and I'm going to show you. You can see that we're just seeing a little bit of upside. So the S&P 500 futures has gone up further since I took that original screenshot. We see a broad sea of green in the European indexes. We're seeing 10-year yields up, we're seeing 5.2. We're seeing yields up across the whole bond market. So there's a pullback in bonds. So just be aware that at the moment, there is this pullback. Now, what will decide if it carries on will be the extent of the coronavirus, how serious it actually is. So that's why I took my profits yesterday, because I thought, look, here I am. I'm in that key support level. Was there enough momentum to break the support level yesterday? No. So therefore, I'm expecting profit takers and potential longs to potentially re-enter. So we're seeing a fraction, and at the moment the equity market is at 23165 for the Nikkei futures. So okay, might expect a move up to here and a further move down, but for me, I was just taking profit on that leg. So now it's over to you. I'm going to ask you to tell me what, in the current risk-off tone, what currency pairs will you be looking at trading? So I want you to tell me in the question panel, in the hand and in the chat panel, all the questions, tell me which currency are you expecting to be strong and which currency you're expecting to be weak. Let me know in the question panel. I want to hear from you, because I want you guys to pick a currency pair. Yeah, okay, so we've got one answer. Hashik, good man, thank you. Hashik, excellent, very good. So we have our first currency pair. Ifam, snap, the same as Hashik, good work. Let's see, anyone else? Sammy, what are you up to? Van, Yasser, what do you reckon, guys? The next coming US session, what are you looking at? Okay. So this is what we have. Yeah, you long or short, Sammy? Long. Okay. Sammy, do you want to, why are you long dollar yen? Let me know. Risk off. Whether you be, remember yen's going to be strong. I think you meant short dollar yen. Okay. Okay, guys, good work. Hashik, Ifam, Sammy, excellent work. Well done, all of you. Okay, so this is what we had. So we had Japanese yen strength. We had that from Hashik, Ifam, and Sammy. So give yourself all a round of applause. That's exactly right. And we had the Australian dollar weak. And if you, yeah, this is where you, Yasser, this is where you send the message here. Just in that, you've got it, Yasser. That's it. Well done. Got your typing questions. And we'd expect the Swiss franc to be strong. And we potentially expect gold to be strong. Okay. Weak, we're expecting Australian dollar, New Zealand dollar, CAD, and oil to be weak. Okay. So we now have a bias. Now you could have dollar yen shorts as well, Sammy. Yes, and Sammy's just made an excellent point. We're seeing some retracements. Now, remember, we've just looked at the equity markets, haven't we? And what we've seen with the equity markets is a slight pullback. Remember that sea of green I showed you? So just let me show you. This is how you analyze things real time, okay? So we know we're in a broadly risk-off market, right? We've seen that. There's been huge falls in the equity markets. Everyone's been speaking coronavirus, it's obvious. Now, we're seeing here some slight retracements because we're seeing some green in the European equity markets. We're seeing some green in the S&P 500 future market. So what the markets are telling us is that, yes, they're risk off, but now maybe they're going to a more neutral area. Okay, so maybe we're having some shifting sentiment. So as we're doing the webinar, we're seeing some shifting sentiment. So that's going to kind of change our approach a little bit. So what that means, let's take the pair that I chose this morning, the Australian dollar Japanese yen currency pair. Okay, that is a good global go-to risk-off pair. So when the world is scared, the Australian dollar Japanese yen pair often gets sold. Obviously, with China being so affected by the coronavirus, that weakens the Australian dollar, because China and Australia do about 30% of Australia's GDP comes from trade with China. So what's bad for China is bad for Australia. What's good for China is good for Australia. So let's look now at the Australian dollar Japanese yen currency pair. Right, and we'll start to look. Right. So here we see, go to the daily chart. Let's just do this from a little bit top down. Get rid of some of this clutter. Right. So here we see price on the daily chart breaking through near-term support. Okay, these are important levels. Okay, remember, a tip to see if something breaks is, does it break and close? So we've got a break and close below this 73.70 region. Okay, so we can see price is now coming back up to that level, but it's not at the moment able to get over the level. We extended down to this 73, towards the 73 handle, but we didn't go much further, and prices bounced back. So we are sellers of this pair. Okay, so potential areas to sell from would be this 74 handle. Okay, an ideal area to sell from. This 74 region, and above at this 74.50. Yeah, 74.50 I quite like there, with the top of that gap. Okay, so another smaller region is here at this 73.74 level. Okay, so we would expect, technically, we would expect sellers on this pair here, 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 and here. Now, this is where you have to be clever, because if price pulls back up to there, we need to also check why. So say, for example, we get the Australian dollar Japanese yen pair spikes up to here, and you see a headline newsfeed that says Chinese government develop brilliant new coronavirus vaccine. Then risk tones changed. Then all these moves down, we're going to see them all reversed as price goes back in the exact opposite direction. In that instance, we no longer expect sellers. So we need to see, when price goes up, why is it going up there? So for example, if we saw a good strong recovery in the equity markets, then that would be reason enough to be cautious about getting into any fresh Australian dollar Japanese yen shorts. So given how far price has fallen, we want to be careful about any extra shorts too early, too low down here. So for me, I would only be looking for potential shorts now, given how far the market's fallen, back up in this region here, the 74.30 to 50 region. That's where I'd be potentially looking for sales, and I'd be ignoring retracements here and here. Okay, the might tempt me the 74 level. This is intraday trading. Okay, so this is when you're opening and closing your positions within one day. Okay, so that's what we're seeing. We're seeing this improvement in risk tone. So now we're a little bit more neutral. Okay, if those equity markets were all in the red still, we'd be very much sellers, and I might consider selling from the 73.74 handle. and the 74 handle, because, you know, I wouldn't be expecting price to go all that way. If it did, then good, but if it didn't, then these regions would be more attractive for sellers. But that's it. We've got our pair. The same is true for the New Zealand dollar Japanese yen pair. Okay. Same true as gold. Okay. Gold, we would expect buyers in a risk-off market, but with a risk-off tone. What are we expecting to see in the gold market? We're expecting to see the gold market pull back, to fall down a little bit. Let's have a look, and here we go. We've got that pullback, right, down into this key support level here. Okay. So, you know, if gold moves down very deep down here, 1562, then potentially that might be worth a buy, just because of how far it's fallen the other way. But keep an eye on the risk tone. That will govern. And obviously, if tone turns risk off again, then the gold is available at a discount. So that's something to be really aware of. And that's what we saw, like on Friday of last week, we saw a big spike in gold, and then on Monday we saw a big spike in gold. So gold is working as a safe haven commodity again. So that's a little bit of confirmation for us. So let's go back to the presentation. We've learned a lesson here. We see the sentiment is broadly strong yen, strong Swiss franc, weak Australian, weak New Zealand dollar. But during the webinar, as we've been doing the webinar, we've seen a little bit of change. So key thing to look for is the US cash open. So the cash open is when we get the indexes for the US opening. Okay, we've got the S&P 500 futures up 0.66%. So let's look at the open. 500, S&P 500, the open, the Nasdaq, the Dow. Let's see how they open. Okay, and that will give us a first set of clues for risk. I'm going to put some website that gives you access to these prices. Okay, it's called teletrader.com, and it gives you access to some of these different prices, so you can look at them for yourselves. Looking forward, we've got a light calendar. There's some earnings, but there's not much calendar. So that means, looking forward, that coronavirus is going to take center stage. We want to quickly learn now a couple of things. This was what I looked back at. Looking back at last week, we looked at pound yen. Okay, we were looking at this as a medium-term trade. It was going back a week ago. We're saying, look, expect pound weakness on dovish Bank of England members. We have weak retail sales data, poor EU-UK trade outlook, and then yen strength on concerns about the spread of the coronavirus, you know, other cases coming. So that was back on Tuesday last week. So that was 7 days ago. So that was just, you know, going back those 7 days. So 1, 2, 3, 4, 5, 6, 7. So around here, we were looking at potential shorts for medium term. So for me, pound yen, you know, traders with shorts would have taken their profit here. Look, it's such a key level now. So this is why I'm not chasing this anymore. I took a pound yen short, and I took my profits too soon. I took it on the open, and I rushed taking my profits instead of waiting for the logical place, which was down here, down at this 141 level. Okay, but now that's what I'm expecting near-term support going into Thursday. So, you know, pound retracing a little bit now, and that's just hitting on support, got some profit taking. That's what is going on with the pound and the position squaring ahead of Thursday. We're about to probably go into a period of consolidation for the pound, a little bit of quietness ahead of Thursday's rate meeting. What did SARS teach us in 2003? This is just a little infographic that I shared last week, useful when this is one guy spread the SARS virus to about 10 people on one hotel floor. So very contagious. And we think the information I've read is that the coronavirus is slightly more contagious than SARS. So you can see why the market is concerned. Now, just going back to 2003, right? This is a couple of graphs. You've got the S&P 500 index in white, and then you've got the Morgan Stanley Capital International Asia Pacific Index in blue. So here you've got, you know, the Nikkei, the Hang Seng, the Shanghai Composite. You've got like all those Asia Pacific indices. Now, kind of the markets were selling off as the SARS virus was getting worse and worse. Okay, but it was here March the 12th when the World Health Organization declared SARS a global health concern. That's interestingly, shortly after that, we saw the S&P 500 recover, and look how quickly it recovered. So it was a slow grind and a quick recovery for the S&P 500. Now that was because there were less cases in America. So the S&P 500 obviously is going to be less impacted than the Asia Pacific index. You can see why. Look here, that weighed on a little bit more. So expect exactly the same. So expect Asian stocks to see things being more of a drag. And you can see after the World Health Organization, then we still saw some downside after March the 12th when the World Health Organization made that announcement. The S&P 500 came out faster. So just to be aware of that. Obviously, what happened in the past doesn't guarantee what will happen in the future. But for any of you S&P 500 traders, any of these US equity traders, that was the historical pattern from yesterday. Obviously, the extent and number of cases in the US will be key for that. But there's potentially a strong move there. And it was like a buy the rumor, sell the fact response. As soon as the World Health Organization declared it a disaster, essentially a worldwide global health concern, that's when the S&P 500 recovered. Sell the rumor, buy the fact. Just wanted to give it to you there, guys. Something to consider. And something else. We covered that last week. That was interesting. Go back to the webinar last week to see that. It's still as valid today as it was last week, but I haven't got time to look at it. But what we do want to look at is the 1% down day for the S&P 500. Now, what do I mean by 1% down day? Now, if you look at the S&P 500, just go back to these. So I've taken a few photos of these today. See, S&P 500 closed down yesterday at minus 1.57%. It is a 1% down day. In other words, the market was down for more than 1%. Now, here's a table. And in these different charts, this shows you what happened when there was a 1% down day historically after a run of like positive or days without 1% decrease. So the last 1% down decrease was in October, and yesterday we had 1.57% decrease in the S&P 500. Now what that means, if you look at the table on the right, you see where it says here 30. In other words, the S&P 500 either fell or went sideways for the next 30 days after losing 1%. So after these strong runs of gains, then there's a 1% loss, and then this is the number of down days that, the extent of the down influence on the S&P 500. So we saw that yesterday. Let's look at the chart. You'll see it from a technical perspective. It'll be intuitive to many of you. Let's just look at the S&P 500. Look, got that massive gap. To see bearish engulfing bars. 1, 2, 3, 4, 5. Like 5 days worth of price covered by the one bar, and then we had another huge sell-off. So we've got this big gap area now waiting to be filled. Got the closing down at the lows. So expecting at the moment that gap to be filled. Okay. Now, if history has, its way, as it were, then expect sellers on the S&P 500. So we'd expect sellers back up at this 50% level and the 61% level. Okay, so a key area for sellers would be here at the 3290 region and the 3300 handle on the S&P 500. So that's just something to be aware of historically. I'm not sure if I'm getting into that. For me, I'd like to see a case for longs. That's quite a big fall. So you're looking at the S&P 500. You know, there is an argument that says, you know, just buy on the dips. But from all the way back in, you know, 1980s, you know, buying on the dips for the last, what, 82, 92, 2002, nearly 30 years, you know, longer, you know, you go back to, has been a pretty good, pretty good trade. And look, every time in the weekly chart, every time you kind of got near this 100, 200 exponential moving average, you know, every time, like, you know, stocks haven't been hit below those 200 moving averages. So a pullback is obviously due, and that's what a lot of the market is concerned about, that these prices were overextended, that this is quantitative easing, this is easy money doing this, and that there's going to be a, you know, a payback, a reckoning. So I'll leave you to make your own mind up on that, but it's always good to see that, and just getting that context of the S&P 500 is helpful. So, my friends, that is the end of our webinar. Looking forward, don't forget, it's a light calendar. So we've got business confidence at 3 o'clock, I think, and that's about it. And I'm not expecting any large moves there. Now, what trades are you looking at? Okay. Over to you before we close for the day. Pop it in, let me know. If you want to put it in your questions, any trades you're looking at, any questions you have, very happy to answer those for you. Gold. Yeah, EFAM, we'll look at gold. Are you looking at buying or selling gold, EFAM, at the moment? Yeah, Sammy, I take your view on that. And I think, for me, Sammy, the Australian dollar Japanese yen pair, if we look at that, if I'm honest, I think the Australian dollar Japanese yen, we'll just get to that, is more neutral, because you've only got to get, you know, your reasoning is sound, Sammy. Okay, it's a more advanced trade, but your reasoning is sound. Like, you know, the equity markets are pulling back, the S&P 500 is pushing up, so maybe we want to look to, you know, buy here. So where would I buy here, Sammy? I would look for a break of this level, and then a return to here will be a potential buy, or a more of a speculative buy will be buying at present prices and just putting a stop underneath. Okay, what, you know, that kind of thing. Okay, at daily. Okay, yeah, let me have a look. So buying at daily with the price underneath recent lows, Sammy? Yeah, I can see that. Look, you know, look how price is extended. You've broken that level. The only thing that you got to watch with that, Sammy, is the risk tone. So what I'd say is, if you're going to do that, keep your eye on the risk tone. And if risk tone changes, you know, 20 more cases of coronavirus in England, and, you know, 15 more in the US, and World Health Organization are worried, you know, any more headlines like that, and the Australian dollar Japanese yen is going to fall again. So for me, Sammy, I would be neutral this pair. However, I can see a case for Australian Japanese dollar yens, and that's a legitimate case. Okay, so that's what I have on that. EFAM, gold. Now that's excellent, really interesting. And you're looking at to buy to gold. Yeah. Okay, buying gold. This was an obvious place to buy gold here. See that level there, the 1573. So I'd look at gold buyers from this area. For me, my concern with this, EFAM, is that we're seeing risk tones get a bit more positive. So we've gone from clearly risk off to slightly risk neutral. Now, the benefit of this, EFAM, is if there's a headline that says, you know, coronavirus is much worse than SARS, you know, the worst is yet to come, declares, World Health Organization director or something like that, then we're going to see risk-off tones, carry on, and then gold will increase. I'll show you what I saw with gold. Right now, this is what I was taking gold longs yesterday, EFAM. I was buying here at this region here, and I took a long trying to break up and carry on up to 1600. Okay, price moved up to here, and I moved my stops because I wanted a quick move, and I was knocked out down at break even. Had another go and knocked out at break even again. It was this region here I was looking at entering. Okay, and this was the reason for me why I didn't. Now look, you see here, EFAM, that was a spike in oil when the US sent a assassination to Iran and killed the top Iranian general. That's when we had a spike in gold prices, geopolitical concern. This was when Iran struck back at a US base in Iraq. Bang, we saw these two spikes. So it's a spike, drop, spike, drop. Similarly here, we have spike, and at the time I was taking a I work as a commentary analyst for another group, and I was saying, look, spike, drop, spike, question mark, drop. So EFAM, I'm more neutral on gold now, and from a big picture perspective, I'm not expecting gold prices to push above 1600 on the fundamentals alone. We've had a really good run up in January, as expected. The US interest rates, the US economy is doing pretty good. Okay, so I don't see like a really, really weak Fed. So, interest rates, they are still low across the world, but they may start picking up. Got the US-China phase 1 trade deal, could be a bit of a turnaround, but gold could lose its value. So for those reasons, EFAM, I'm not convinced about a gold long. But EFAM, what would convince me is, say you got another trigger. So another trigger for gold, something like this, a big crisis or much worse geopolitical concern. But as it was, that's quite a muted reaction, really, on the open. 26, quite a muted reactions. That's Friday and that was Monday. So that's my take on EFAM. And where I would look to re-engage gold longs, say it fell down to this region today, 1560, maybe 1550. 1550, I would be a gold buyer today. Okay, so that would be of interest to me, just because it will be a big stretch to get down that far, and I expect to find buyers at 1550. Prices up here are just not attractive for me today. It's too expensive for my liking in the current market conditions. Yeah, head and shoulders. Let's have a look at that head and shoulders. Yeah, it does, shoulder, head, shoulder. Yeah, okay, Sammy. Thank you. Sammy, you read my mind. One hour chart, head and inverse, head and shoulders, inverse. So I'm struggling to see that one, Sammy. So is that a potential head and shoulder? So head, left shoulder, wait for a right shoulder neckline here. Is that what you're looking at? Oh, on gold. We'll get there in the end, Sammy. So Sammy's looking at potential 1 hour head and shoulders on gold. Yeah. 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 You can see that, the break of the neckline. Yeah. So what Sammy's saying, EFAM, is that there's, looking like potential, left shoulder, right shoulder, head, neckline break. Then you'd expect to see the same length downside. So you'd expect to see, was it 1570, 1586? So you'd expect to see 1576 for 1566 region. So you'd expect to see gold potential to fall into this near-term level. So that might be potential area for potential longs here. But for me, so that's actually not a bad area. So if you were a gold buyer, that would be quite a sensible area. You'd expect to find buyers. For me, it's the 1550 region. I'd want a much deeper pullback now, unless you get a oh, what's the word? Sorry, my mind went blank. Unless you get a catalyst, a reason for gold buy, then I am a gold buyer. I hope that helps you, fam. That's Sammy. Thank you. We got there. We got there in the end. We got there on the right chart. Yeah, supporting decline down to 1566 is what Sammy's saying. Head, left shoulder, right shoulder. Get a break of the neckline. Then you got from the head to the neckline, and you have equidistance from the head to the neckline. Is the the vanilla setup on a head and shoulders, which takes you down to this 1566 region, which coincides with this area. So that would be an area. If the risk on tone carries on, so if risk tone carries on, then I would expect gold sellers from here, back from that region, which is also coincides with a retest of the head and shoulders neckline that Sammy pointed out. Okay, so that would be, if risk on tone carries on, expect sellers there, and then expect sellers deeper up there. Guys, I hope that helps a lot. It's been a really good session with you. Don't forget, I'm here on Mondays as well. I will be here again next Monday, and we will be looking at the key coming events. I hope you guys have a really good time. Thank you very much for attending the webinar. Yasser, Van, Sammy, good to have you on board. Hashik, Ifam, thank you very much, guys, for your contribution. And welcome to Fitner, Salvatore, good to have you here as well. You guys all take care. I hope you have a very good week. And don't forget, come back next week, Monday, and we'll go through it again. And don't forget, you've got your questions, you've got your trade ideas, any trades you're taking. Maybe we can look at a trade you've taken, give me the parameters, we'll look at it together, we'll have some learning from it. Okay, thanks Yasser, Sani, Ashik, take care now guys, goodbye.